Hello, welcome. Hopefully you enjoyed the last video where we discussed a pullback strategy on the UVXY that we notified our subscribers about recently. Today, I want to share with you another strategy in a live trade that we did. To those of you who are new to my customer list, I want to share some of my trading background. I started trading at the age of 21 when I was first recruited by George Lane. He's the father of the stochastics indicator. I worked side by side with him in his research department, and I helped him in his writing of his newsletter and doing market analysis. So every day in my life, and that's 35 years ago, there hasn't been a moment where the markets haven't been at least the forefront of what I look at. And my job is to make sure that I outperform the market and share that with my clients and see them succeed just as well. So here's to another trading strategy that you can use. Have a great evening.
First, please take a moment to read this important risk disclosure statement. As you know, trading, there is a risk of loss. This video is intended for education purposes only. All right, so here's what we did today. We were stalking, as I like to call it, crude oil. First off, crude oil opened lower. It traded down to when we came into the morning, as you can see, at 8:30 in the morning, and had this big down bar right here. Not much to do. It's trading right below the pivot. And as we started to make newer lows in the market, you'll notice the momentum indicator. This is the person's advanced histogram. It's a momentum indicator. As price is making newer lows, the momentum is making higher lows. This is my volume indicator. You will note that the histogram component is starting to make progressive higher lows. In fact, it has a zero line and a moving average component. The momentum turned positive, and here is the key. We were setting ourselves up for a trade. We weren't sure what the setup was going to be. We just knew that the market was losing its negative momentum. What was the setup? The high closed doji. This is a powerful pattern, and this is one that is really a strong part of our trading program. In fact, you most likely have the information on how to use this. I'm just helping you to put it together, because it does take a little bit of patience to wait for one of these signals. But what's beautiful about this pattern is it tells us where to get in, and as you can see, long two contracts, teaches us where to place our stops, and then when the market gets near our profit target, we can scale out. And in this case, we scaled out of one trade, and what we've done is simply the market trails stops according to the balance of the position. So in this case, we're still long one and trailing a stop. So this pattern is one that, how can we efficiently trade it if we have to wait all day? Well, in a case like this, the high closed doji comes after downtrend. So when the market's down and you start to see momentum readings lose their bearishness, you can start to see and wait and say, hey, this market's getting ready for a flush to the upside. The trigger is the call to action is based off the orange candle, the high closed doji. And of course, now we know where to get in the trade, where to place our stops, and to look for a profit target. So if you have questions on this, give us an email. We're more than willing to help you guys out with your trading, and that's why we've enacted the series of strategy videos to help you and to encourage you to improve in your trading on how to use the person methodology. Have a great day. Thanks.